Yeah, sorry about that. My background was a bit noisy. Okay, so sharing my screen. So we begin the session. Okay, so on today's class, we're going to be talking about quite an interesting topic called understanding currency pairs, Euro USD, not just a dollar, not just the dollar. Okay, so like I said, understanding currency pairs is today's topic. So moving on. All right. So before we dive into the session, we're going to briefly discuss, we're going to get to know each other. I know you've been wondering who is Kleinel, where is Kleinel, what is Kleinel, and I'm here to tell you that Kleinel is an edtech company dedicated to empowering individuals with the knowledge and skills to understand and navigate the world of Web3 and cryptocurrency, or digital currency as a whole. So we're here to help you set your foundation steps and a very rigid foundation, a very rigid foundation, which can help you have solid knowledge, solid background in what you're diving into, which is digital currencies. Our mission is to make digital currencies accessible and easy to understand for everyone, regardless of your prior experience. So here at Kleinel, we provide clear, concise guidance and actionable steps to help learners make informed, smart, and safe decisions. Because in this landscape, it's a rapidly evolving landscape, and you want to be able to go with the flow and not be left behind. And while going with the flow, you want to be aware of the decisions you're making. You want to be able to make smart decisions. And that's what we're here to do. We're here to guide you every step of the way. So we here at Kleinel, we are committed to fostering confidence and competence in exploring Web3. The Web3 space is the digital currency space. And we're here to prevent you from being exploited, and we're here to also kill that fear of exploitation, because by the time you know what you are supposed to do, you know what to do, nobody's going to exploit you out of ignorance. So here at Final, we're here to position you and to set you in the right path, the beginner's guide down to being a professional in digital currencies. So moving on, like I said, today our topic is understanding currency pairs. We're going to be using the Euro USD, which is the most traded pair worldwide because it's the United States and the European currency. So now diving right in. So what are you going to be learning today? You might be curious about what you're going to be learning today. And here today in this topic, understanding currency pairs, you're going to be learning what a currency pair is all about, what a currency pair is, what's a pip, what's a lot size, how leverage works in forex markets, and how forex profits are calculated. So I know by the time you saw the topic, you thought, okay, we're just going to talk about what a currency pair is and we'll be done with today. But today we have a real session packed filled with interesting information and very useful information. So you might be asking why this class matters. That's the question. Why do we know? Why do we need to understand currency pairs, what pairs are all about? Isn't it just okay? You see the USD slash euro, that's a pair. You see the euro slash USD, that's a pair. GBP slash USD, that's a pair. But it's not just that. That's the foundation. That's the beginning. of everything. But why it matters is it's the foundation of all forex learning. Yes, quite all right. Everything in forex is based on currency pairs because yeah, what else are you doing in forex if not trading currency pairs, trading one currency against another? And another thing is you never trade a currency pair alone. You can't just trade the United States dollar. What are you trading it against? What are you buying the United States dollar with? Like which which currency are you ditching to take up another currency? Which currency are you ditching to take up the US dollar currency? So another reason is currencies move the world. You could profit with as little as $5. That has to do with us explaining a lot about the lot size, the pips value, and the leverage system in the forex market. So we're going to take our time today and we're going to dive into each and every one of those topics. So first off, we have to before we get into how to calculate the profits in forex, what is a currency pair, you might be asking? A currency pair is a quotation of two different currencies, like, as is written here, showing how much one currency is worth in terms of another. A currency pair shows the value of one currency compared to another, and that's the definition of a currency pair. So we're going to dive into an analogy to make this all clear. So let's say you want to buy the US dollar. What are you buying the US dollar with? Because usually he wants to buy the US dollar here in Nigeria. What's the means of getting the US dollar? Are you just going to go and tell them give me US dollar and they'll give you like that? No, there has to be a means of exchange. And this this currency pairs now we have the USD NGN or the NGN USD, which is a pair saying you are giving your Nigerian naira for a particular amount of the US dollar. So a currency is always traded in pairs. Currencies are traded always in pairs because its value only makes sense relative to another currency. That's just how it works. A currency is always traded in pairs because its value only makes sense relative to another currency. You can't just single-handedly trade a currency. You can't just go and get a dollar without exchange. So now, say I bought the dollar. Saying I bought the dollar is like I bought milk, but forgetting to say how much you paid for it. I don't know if you get that analogy. Was it 1 naira you used to buy the milk? Was it 2 naira you used to buy the milk? Or 3 pesos or a dollar? You can't just get milk. So you see, your milk now is paired with your naira or the means of exchange. So, and we have plenty currency pairs. And here on my screen, I just have few examples. And remember, a currency pair shows the value of one currency compared to another. Here we have examples of currency pairs. We have the Euro USD, which is the most traded pair worldwide. We have the GBP USD and we have the JPY USD. In case you are wondering what's the full meaning of EUR means is the euros, the USD, the United States dollar, the GBP is the Great Britain pound, and the JPY is the Japanese yen. So the currency pair is made of two parts. Well, our currency pairs are made of two parts. We have the base parts and we have the quote parts. The base part and the quote part. So what is the base parts? You might ask. What is the base currency? The base currency. The base currency is what you are buying or you are selling. That's the first right here. Here in this example, the euro represents the base currency. So this is what you are buying or selling. Then the quote currency is what we have on the other side, which is what you're using to measure or pay with. That is the means of measurement, the quotes, as you may say it, like the means of measurement. Because now, okay, you want to buy $1. $1 now in the end, let's use an example, the NGN USD. $1 is equivalent to 1,580 in the black market. So it would be 1,580 per USD, because that is your base currency is what you are using, what you are buying or selling with. You understand? So now, and your quote currency is what you're using to measure or pay with. So we're going to this is a real practical session. We're going to also be looking at quotes from we're going to be looking at quotes from where is our Meta 5 trader? Sorry about that. So here on my screen, we have quotes. Sorry, while we're waiting while this Meta 5 trader loads up. Uh, okay. Okay, this Meta 5 trader might not be working. Let's go to our trading view. Okay. Here on our trading view, looking at the FX side, we have our quotes. We have the GBP CHF, the GBP USD, the Euro JPY. And right on this side, we have the value of the the quote currency. So GBP CHF, let's use our example, the Euro USD. So €1 is equivalent to what this currency pair is saying, this euro slash US dollar is saying is that €1 is equivalent to 1.392 United States dollar. €1, this euro right here, is equivalent to 1.1392 US dollar. So that is in accordance to what we have here. The base currency, what you are buying or selling, we want to buy euro or sell euro against the quote currency, which is your United States dollars, which is what you're using to measure or pay. That's why right here, sorry, that's why right here, what we're using to measure is the United States dollar right here. So that's why €1 is equivalent to 1.1392 US dollar. So now moving on back to the class. So after finding out what our currency pair is, which is uh sorry about that. Our currency pair is a quotation of two different currencies, and we have two parts. Our currency pair consists of two parts: the base currency, which is what you're buying or selling, then the quote currency, which is what is used to measure or pay, which is what is used to measure what you are buying or selling. And we saw the example, which was the Euro USD, how €1 is equivalent to 1.139 euros, 1.139 USD. Sorry. So now what we're going to be diving into peep value. Peep value. So what is a peep, you might ask? What is a peep? A pip stands for percentage in points or price interest points. It's the smallest movement a currency pair can make in most cases. Yes. And here on our screen, we have the 1 pip. 1 pip is equivalent to 0.00001. That's four decimal places. That's four decimal places. 1 pip is equivalent to 0.001. 0.001 of in four decimal places, sorry. So, for example, if Euro USD moves from 1.1 to 1.1005, and 1 pip is equivalent to 1 pip is equivalent to 0.0001. So moving to 0.005 is 5 pips. Yeah. So if Euro USD moves from 1.1 to 1.1005, we can say that Euro USD increased by 5 pips. And what is this pips? This pips is the percentage in points, your percentage in points. And why is this important? You might ask. The pip measurement, the pip value is very important when it comes to trading currency pairs. It's very important when it comes to currency pairs when it's a point of measurement because like we have here, let's go to our trading view. Sorry. In our trading view here, let's dive into the charts. And sorry, while our chart is loading. Okay, so now you notice that the market is closed right now. The market is closed right now. But now we want to see something. We want to see how the forex market moves. Basically, it moves in pips. There is no large increase. The only increase you are seeing are pips increase, and this is the daily time frame. So let's go to the weekly. Let's go to the weekly. So you can see from here to here in forex, price don't just move. Okay, one euro was equivalent to $1.1 today. Next thing tomorrow you see 1 euro is equivalent to $2. So that says a lot because when we are dealing with forex pairs now, we're not just talking about money, we're talking about nations' economy. So and the increment is measured on the charts in pips because there's no drastic movement from 1 to 2 to 3. Instead, you see decimal points like decimal increase. That's why you see 1 pip is equals to 0.0001. So now from here you can see you can see if you're to measure, let's use our tool. I know many of you might not be familiar with some of these tools we're using here, but we have our masterclass, our mentorship program, which has already kicked off, and we're already teaching. We're going to show people in our mentorship program a lot about how to use these tools. And as you can see, so here we have the percentage increase at the middle. Here we have the pip increase, the pip value. Here it increased by 247 pips. So if you look here from the starting point, if you add 247 pips to, and how do we do that? So now let's capture this. This is 1.13464. Let's go to our calculator because we're working with facts, we're working with data. So 1.1, back to the chart, 1.1, sorry, from here, 1.13464. Sorry, I'm getting feedback that you cannot see my screen. Let me come back. Okay. Sorry, can you? Sorry about that. Can you see my screen now? Okay. You can see my screen. That's okay. So let's go back to the example. So here we're going to measure the pip increment in price, starting from this point here, which we have 1.13412, 1.1341112. So now we're going to add the pip increment and see if it gives us that price at which we have right here. So now price increased. Okay, so sorry, it was 1.13447. 1.13447 plus the increments. We have price increase of 247.2 to give us this price of 1.15919. So we're going to add this pip increments, which is 247.2. 247.2. Sorry, yeah, not just 2.47.2. Remember, pip increments is in four decimal places. So 0.00. That was three decimal places. Two, sorry, let me get that again. 247.2. 2472. So we got 1.15919, and that is exactly the price. It got to 1.15919. You might be asking me, okay, why didn't I start from 0.0001 like that? So one pip is equivalent to 0.001. Let me make this visual. One pip is equals to one pip is 0.0001. So, and there we have 247.2 pips. So it will be 0.001 times 247.2. So this was why I started at the second decimal place to add 1.1. Yeah, that's why I started from that decimal point to add it up. So moving on to our slide, excuse me. Okay, so we now know what a pip is. The pip is the increment in price because it's the smallest increment in price because forex currency pairs don't just increase rapidly. There is change in pip value that is in that four decimal places, which is shown here in our trading view. Yeah, as you can see, we have one decimal points, two decimal place, three decimal place, four decimal place. So there's usually increments from this place. The increment from this place is usually the pip increase. So moving on to what what is what is lot size? What is a lot size? What is a lot size? You might ask. In Forex, you don't trade $1 or euro at a time. You trade in bundles called lots. Think of it like buying groceries in bulk. You don't buy one grain of rice, you buy a bag, and that is exactly what a lot size is. That bag of rice analogy describes what lot size is. And in Forex, that bag, that bag of rice is called a lot. We have different types of lot size. We have different various types of lot sizes. Let me see if my screen is still showing. Sorry. Okay, my screen is still showing. So in Forex, we have three different types of lot size, and we have the standard lots, which is 100,000 units. We have the mini lots, which is 10,000 units, and we have the micro lots, which is 1,000 units. In Forex trading, a lot is a fixed amount of currency you buy or sell in a trade. A lot size is a fixed amount of the currency you buy and sell in a trade. You don't just, like the analogy say, you don't buy one grain of rice, you buy in bulk. So because let's see it this way. You want to trade Forex, you want to trade Euro USD. Are you just going to trade that, okay, yes, $1 is going to increase against the euro? No. How how would how would you profit from that? So now let me explain this. This is where the lot size comes in, because we have three different types of lot size. We have the standard lots, which is 100,000 units. So one lot size is a standard lot, one lot size, and let me see if I can show you that in our one lot size is equal to 100,000 units. 0.1 lot size is equals to 10,000 units. Let me show you that on our Meta 5 trader. Let's see if our Meta 5 trader is working properly now. Uh, okay, yes, we're back. So now that we're back, okay, the market is closed. Let's see, what can I use? What can I use? Let's use the Bitcoin charts. So let me quickly close this and reopen. Uh, and my Meta 5 trader isn't responding now, but I will share a better example later. But right now, let's get back to the lot size and the explanation. So one lot size One lot size is equals to 100,000 units. 0.1 lot size is 10,000 units, and 0.01 lot size is 1,000 units. Because in Forex, you trade in bulk, you don't just trade like $1 against your €1 and expect profit to come out. Profit will come out, but not as much as you expect. So now this is where the pip value, the lot size, and the forex leverage system all play hand in hand to make you profits in the market. So now I'm going to be explaining something with 100,000 units, which is your one lot size, which is your standard lot size. With this size, each peak movement, this is where they all work together. With your lot size, with your standard lot size, each peak movement is worth about $10. For one peak movement with your 100,000 units, your standard lot size, one peak movement, like we discussed before, this one peak here, which is your 0.001 increase. That's the fourth decimal point in your price, the increment. So now one pip like this is equivalent to $10. Then for your mini lot size, which is your 10,000 units, one pip is equivalent to $1. Yeah, so price move, price move 1 pip is equivalent to $1. Then your micro lots, 1,000 units, 1 pip is equivalent to 10 cents. That is $0.1, 10 cents. So now, how does this come in? How does this work? So, for example, you go long with one standard lot size. You go long on euro by saying go long. I don't know why Meta 5 is not working right now. I would have loved to show you what I mean by go long or go short or buy and sell. So now you buy euro USD. That is, you are saying euro is going to go up against the United States dollar at a price of 1.1. At a price of 1.1. And now price actually goes up in your favor. And the price moves from 1.1 to 1.105, which is it goes up 50 pips. And remember, you're using a standard lot size, which is one, which is equivalent to 100,000 units. 100,000 units. And this unit now represents $100,000 because that is your quote currency. That is what you are measuring your purchase, your buying or your selling with. So you are buying or selling with 100,000 units. You get so now price moves 50 pips in your direction. I remember 1 pip in your standard lot size is equivalent to $10. So now price moves by 50 pips in your direction for that standard lot size. That is 50 times $10. So your profit will be $500. And it's as simple as that. That's how the calculation is done. That's how the calculation is done. Let's say you're using your mini lot size now. Price 1 pip increase in your direction is $1 for your 10,000 units in your mini lot size. So 50 pips would be what? $50. In your micro lot size, which is 1,000 units, 1 pip increment is 10 cents or zero point 0.1. So 50 pips will be $5. So that's how you calculate it. You don't really have to do this with your head, but it's good you know how to do this because we actually have a pip calculator. You can get pip calculator when you enter your Chrome. I'm going to be showing you that now. Pip, you just go search pip calculator. Sorry, pip calculator. When you search that, you can use the very first one that comes up and you can use it to calculate how much each pip would be for you. And like you see, we have here, like we discussed, 1 pip for your mini lots, your micro lots. 1 pip for your micro lots is equivalent to 10 cents. That is 0.1. So now for your micro lots, 50 pips would be $5, like we discussed, $5. So you see, the calculation is correct. So back to our slide. Okay, so now we know what a pip is. We also know what a lot size is. We know what pip value is and what lot size is. Now we're moving on to the leverage. The leverage. The leverage system. Leverage system. A currency is always traded in pairs. A currency is always traded in pairs because its value only makes sense relative to another, which is the truth. Like going back to what a currency pair is. So, why did we start from currency pair? Currency pair is the foundation. After knowing your currency pairs, the base currency and the quote currency, which are the two parts of your currency pair, we moved on to a pip value. From pip value, you got to know that 1 pip is equivalent to a 4 decimal point movement in price because you notice that usually your price doesn't just change rapidly from 1.1 to 2 to 3 like that. No, it changes in pip increments. Pip increments, pip decrease. That's how the forex market goes. So now from there we move to lot size, which is we saw the standard the mini, and the micro, which is how you trade the forex market, because you do not just trade a grain of rice like the analogy. You don't trade when you're buying rice now, you want to sell rice, you not trade a grain. You either trade a cup, a bowl, a bucket, or the entire bag. So in forex, it's like that. You either trade just like you have when you are buying stuff. You either buy a dozen, half a dozen. So similar stuff. That's how forex works. You either trade one lot, which is your standard lots, your mini lots, which is your zero point 0.1, or your micro lot, which is your 0.01. So it's traded like that in bulk. You don't just trade a single grain or $1 or 1 naira. So now here we're going to talk about leverage system. The leverage system is very, very important, and all these joined together is going to show you how profit is calculated and loss also, as well as losses. Losses are also calculated in the forex market. So now, what is leverage in forex? Leverage is like a loan from your broker. It allows you to control a bigger trade size with a small amount of your own money. Leverage is like a loan from your broker. We are all aware of who our forex brokers are. We have XNext forex broker, Deriv forex broker. We have uh the FTMO. We have Funded Next. There are many forex brokers. You have to choose which works for you, which platform is more convenient for you. So now, how leverages are presented in forex, we have it right here. We have They are presented in this ratio format, which is 50 ratio 1, 100 ratio 1, and 500 ratio 1. So now here you control $500 with a $10 margin. So this might seem confusing, but I'm going to break it right down for you. So starting with our 500 ratio 1, let's start from the bottom. So this leverage means for every $1 you have, you can trade $500 worth of the currency. That's what this 500 ratio 1 is. So for every 500 $500 now, right here, for every $1 rather, this ratio 1 represents your $1. For every $1 you can trade $500. That's why it's 500 ratio 1. You understand? So now, to open to open a $5,000 trade in your micro lot, because your micro lot is 0.01 and it's equivalent to $1,000 or 1,000 units, how you may have it. So now this represents 0.05. But okay, let me explain this now. So now, as you can see here, margin size, if you are not aware of what margin is the amount of money required to open a trade, because you don't just open trade out of thin air. That's why you have to fund your account. So now, you funding your account now, okay, you have $5 in your account. Okay, you have that $5, you want to start trading. But what Kleiner does for you now is you don't just start trading, you know how this trade is executed and why this trade is being executed and how it actually works. We're breaking down the system for you here, Kleiner, for you to understand. Okay, yes, my $5, it's not that it's my $5 that is just bringing me profits that I'm just going to use to trade. I'm going to leverage this $5. And with your broker, the reason you have to pick your brokers, like you have to take your time and select your broker, because not every broker has this leverage system available for them. I know of Deriv and Exness having this 500 ratio 1, which says that for every $1 margin you have, you can open $500 worth of the trade. So now, and you open trades in lots, you don't just open anyhow. So now, for you to open, the lowest you can always open is a micro lot, which is 0.01, and 0.01 is equivalent to $1,000, like we said. So now, for you to open a 0.01 lot size, you are what's going to be required now, because now $1 will open $500 for you, so $2 will open $1,000. So your required margin to open 2,000, to open a $1,000 trade, your required margin will be $2 here instead of 10. The reason here is showing 10 is you want to control a $5,000 trade. So now for every $1 you get 500. So now multiply 10 times this 500, you get $5,000. So you're opening $5,000 position will cost you $10 to be able to open this $5,000 trade, or your 0.05 lot size trade. So let's go to 100:1, and let's actually see what it means. What it means is that for every $1 you get to open $100 worth of the trade. So for you to finally open a micro lot size, which is your 0.01, you're going to need $10. And this $10 saying that you're opening $100 10 times to give you $1,000, which is your micro lot size. Now, moving on, this 50:1 says that for every $1 you open a $50, you control $50 trade, you control a $50 account. So now, for you to open a $500 account, a $5, sorry, a $500, for you to control a $500 size account, you're going to need $10. That's why here the example we're using here is the margin required is $10 actually. So now opening a $500 trade, that is to leverage a $500 trade with your $10, basically, because your margin is used to leverage a trade. Your margin is required to apply this leverage for you to be able to control this amount. That's the basic analogy. So now most brokers go with these two, 100:1 and 500:1. And this ratio, like I said, it means you for every $1 you open 500. Starting from here, for every $1 margin you have, you can open $500. You can control $500 trade. So now you controlling, let's say you open a micro lot size of 0.01, of 0.01. This is supposed to be a very practical class, but my Meta 5 isn't responding. Let's see if Meta 5 will respond. Uh, Sorry, guys. I think it's my service, but we will have that presented some other time. So for every $1 margin required, you get to open $500. You get to open 500 a $500 trade. So now let's look at a real example. So now with a $5 balance plus a 500:1 leverage, 500:1 leverage system, you want to trade Euro USD with a micro lot. And remember, a micro lot, which is your 0.01 presented in your trading platform, is equivalent to 1,000 units or $1,000. So now a peak value is equivalent to 10 cents. Remember, so we're joining all these things from your lot size, your leverage, and your peak value. So you can combining the knowledge will help you understand how profits is being generated, how losses is being generated or calculated. So now you only need a $2 margin with a 500:1 leverage system to open a $1,000 trade to control $1,000. That's how leveraging works. So now remember, this 500:1 leverage says that with $1 you open 500, you control $500 trade. So now with $2, how much will you control? You control 1,000. dollars trade. And $1,000 is equivalent to your micro lots, which is your 0.01. In some cases, you get to open below 0.01 lot size, which is your micro lots. But majority of the time, it doesn't work like that. Only few brokers allow you open lower than that. That's why I said selecting your brokers actually works hand in hand with all this knowledge you're gathering. So now, with a $2 margin and a leverage system of 500:1, you can control a $1,000 account, because remember, in forex, you're not just trading 1 grain of rice like the analogy, or $1. You're saying $1, yes, dollar is going to go up against the euro. Okay, what are you trading? You now say, okay, $5. Let's use the example. You now say, okay, $5. You are longing with your $5. You are going to long the market without a leverage system and a lot, without using the lot system. You would not see any realistic profit, because the price increment is very little. It's price increments and price decrease is measured in pips. That is the fourth decimal place in price. So knowing all these things is really important. So now back to our example. You buy one micro lot, which is 1,000 units of Euro USD at 1.1. Price moves up to 1.1010, which is your 10 pips. So now, how do you calculate your profits? 10 pips times 0.1, which is your 10 pips times 10 cents, which will be equivalent to $1. So for every 10 pips movements, for every 10 pip increments in price with your micro lot size, you get $1. So let's say price moves up from here now. Let's say price moves up 100 pips in your direction. You're making $10 profit with your $2 margin. With your $2 margin. So this is how the leverage system works in the forex markets. With your margin and your leverage system and your lot system all working together, you get to actually make profits of this market, because without them, you can't actually see reasonable profits in the market. So yeah, so combining, before we dive into the ISA Act and all that, we're going to do a brief recap from currency pairs. We know what currency pairs are. Currency pairs are the quotations of two different currencies, and they're divided into two parts. We have the base and the quotes. For those of us just joining or that join late, we have two parts of currency pairs, the base and the quotes. And a currency is always traded in pairs. You don't have a single currency on its own, except you're just calling your currency. Nigeria uses Naira. That's the only point at which it exists single-handedly. But when you want to trade, when you want to make an exchange, that your currency is paired with whatever you're exchanging it with. So now let's say, why I say that is because, okay, you want to make a purchase now, whether you like it or not. You want to buy milk, you want to buy Milo, you want to buy biscuits. Now that's your currency pair. As long as you're making an exchange, that currency pair is paired with that item you are making an exchange with, you are making purchase with. So, and that's why it's called exchange. That's why it's called an exchange. And it's very important for you to know, because the forex market is actually, it actually stands for foreign exchange. So now we dive down to pip value. We understand that the pip is the percentage in price, sorry, percentage in points. That is the smallest movement a currency pair can make. And that's what happens in most cases. Moved on to lot size, and this told us that crypto is traded in bulk and not just by a grain or by a dollar. Then we moved on to the various leverage systems, and we saw an example. Now we're going to dive into the ISA Act 2025. And this act, this ISA Act was released by the the Security of Exchanges of Nigeria, the Security and Exchange Commission, sorry, pardon me for that mistake, of Nigeria, which has made recognition of digital assets and has also declared cryptocurrencies and yeah, cryptocurrency as a legal tender. Digital assets, they have recognized digital assets. This is the full report. You can also, when you get this, and click the link and you can view the full report if you'd like to go through it. So now in Kleino, here at Kleino, we have the 6-step strategy that will help you succeed in trading digital assets. And we're going to dive into that right now. And first off, we have identifying the path for you. We help you as we assist you identify the paths which you want to take, whether you want to trade the forex market, you want to trade the stock market, you want to trade the cryptocurrency market, because digital currencies are a whole lot. There are different ways you can profit from digital currencies. So first off, we help you identify your paths. Then we help you learn that skill which is required. We help you learn that skill which is required for you to take that path. So we help you learn that skill of the path you have taken. Sorry for that mistake. Then after we help you learn the skill, we help you practice simulations, because practicing simulations is very important. And I was actually going to show you an example of practicing simulations, but my Meta 5 trader is having an issue, and that's very important because what I was actually going to show you is part of practicing simulations, and it's very important because I show you the leverage system, I show you what pips are, I show you what spreads are, I show you what lot size where they are all positioned in our Meta 5 trader, which is our trading tool. I show you how to execute your trade. I show you what happens when you execute your trade. I show you how to close your trade. And these are all practice simulations because we get to do this with dummy currencies. We are not doing it with real money. That's why you practice simulations and you have to feel free. But when also practicing with simulation, you have to apply your risk management because as tempting as it might be that you're seeing 100,000 dummy currencies, you feel like, okay, wow, because you're buying and you're just going without proper analysis, you feel okay, you can use your money to do that. No, that is why we have practicing simulations. But while practicing simulations, you also have to apply proper risk management. So now, after that, like I discussed, you gain the trade psychology, you gain trade psychology, and you gain risk mastery because risk mastery is very important when it comes to digital trading digital assets. You have to have a plan. You don't just jump right in. And from there, we have another way here at Kleiner will set you up to achieve. We network with you, we help you with networking with fellow traders because there's a community available. We help you analyze your portfolio and also make informed, well, well informed decisions. So after that, after we carry you through this process, you become an expert. So we craft this 6-step strategy to help you succeed in trading digital assets. And we have looked at it and we're moving on to who is a forex analyst. I know you've heard of it, you've seen it before, but I'm here to tell you one more time who a forex analyst is. A forex analyst is like a weather forecaster, but for currency markets, their job is to study trends and data to predict how currency prices might change. And yes, like what we just dwelled on before, the currency markets, the forex markets, currency pairs, whether the price is going to change in upward direction or downward direction. The forex analyst analyzes the market and predicts the movements with technical analysis, fundamental analysis, and sentimental analysis. So now, excuse me, the forex analyst studies the markets. They check USD related currencies because USD is one of the most traded currencies in the world, and it's paired with different currency pairs. So they study the Euro USD, GBP USD, they analyze and see price movement. They use technical analysis, looking at charts and the spot patterns, the spot trends. they predict opportunities. They while analyzing the markets, they get to analyze the trends, the patterns, and they see opportunities, whether we're in an uptrend or downtrend. Okay, you know what to do when you are in an uptrend. You get to buy. So we look for buying opportunities after identifying this trend, and we make well-informed trades. So, and we advise a forex analyst advises traders on trades themselves, or rather, they trade themselves. So now they recommend selling Euro USD, betting that the dollar will strengthen, or buying USD JPY, betting that the yen will weaken. So now you are trading, you're not just trading currencies, you're trading the economies of these countries. So now you saying USD, you trading the pair USD JPY and saying that USD is going to go up, that is you're going long or you're buying USD, you're saying that JPY is going to weaken, the currency is going to weaken compared to the United States dollar. So now what skills, what are those knowledge that are required by Forex analysts? We have the introduction to Forex trading, core trading concepts, Meta 5, Meta 4, integration and navigation, technical, fundamental, and sentimental analysis, support and resistance levels, candlestick and chart patterns, leverage, lot size, and spread, risk management strategies, advanced trading strategies, Fibonacci levels, pivot points, and Elliott waves, which are our indicators. We teach the indicators, how to use indicators in analyzing the forex market. We have the time frames and confluences. Time frames are very different. They are very, sorry, we have different time frames, and they are very important for you to learn how to analyze from on different time frames. And we, okay, the person, the forex analyst, is also forex analyst also knows how to generate trading signals. A lot of you have probably been part of some signal group that they drop different trade ideas, and that is not just done by guesswork. You actually get to analyze the markets. So the tools you'll be using as a forex analyst, you have your Meta 4, Meta 5 trader, and your trading view. You have your Forex factory, which is basically where you get all your news, which is part of your fundamental analysis and also your sentimental analysis. So now, this Forex analyst program is going to last for 2 months, 1 month of learning, intense learning, which attendance is required, compulsory. Then the second month is 1 month mentorship, and the classes are going to be held Saturdays by 11 a.m. to 2 p.m. West African time, and on Sundays by 3 p.m. to 6 p.m. West African time. So now, aside from your forex analyst, you're asking, is it only forex client deals on? No, we also deal in crypto. We also teach people how to stay positioned and make informed decisions in crypto. And how do we do that? We set up a very interesting course called the Sports Analyst course, and here you're going to be learning who a spot analyst is. Let me briefly tell you who a spot analyst is. A sports or crypto analyst is like a gold trader who studies market trends to determine whether to buy or sell physical gold. But in cryptocurrency, the currencies are not actually physical, they are more digital. That's why we call them digital assets. So now, but instead of gold, they analyze cryptocurrencies like Bitcoin, Ethereum, and Solana in the spot market where transactions happen instantly at current market price or a limit price. You can set a limit order. So we're going to be teaching you all that in the mentorship program. uh, Here we're going to be teaching you market research. You're actually going to be doing market research to study price trends, blockchain activities, on-chain activities. That's a really deep way of researching because the blockchain technology, like we discussed in our earlier master classes, is an open ledger system where you actually get to see all what is going on. You get to trace transactions. You get to see, okay, one Bitcoin was sent out from this wallet to an exchange. What does that mean? 100 Bitcoin was moved. You see all these things. These are part of the research that are being done, and more light is going to be shed on how that is carried on in our mentorship program. And next on, we have technical analysis. They analyze charts, patterns, and indicators to predict price movements. Yes, that is going to be part. We have the fundamental analysis. They examine factors like adoption rates. Lots of countries are adopting Bitcoin as a means of exchange. They have Bitcoin reserves. Before we had dollar reserve, gold reserve. Now we're having Bitcoin reserves for countries, and that is really marvelous. That shows a large scale of adaptation. So now, next on the no risk management. You're going as a sport or crypto analyst, you know risk management because we are not gamblers. You make well-informed decisions with proper risk management. So they assess market conditions to advise traders on when to buy or sell. So now, what are you going to learn in the sports analyst course? You learn introduction to sports trading on centralized and decentralized platforms. You learn staking, yield finance, and you learn how to identify narratives and how to research those narratives. You learn risk management. Risk management is not something you can escape. Risk management is very, very important. It's something you have to understand. You have to have a risk management system. You have to come up with that. Or okay, our client, we can help you come up with a risk management strategy. So now, you're also going to be learning how to calculate your risk to reward ratio and your leveraging system. Yes, the crypto system also have a leverage system, and we're going to be showing you how you can leverage a small amount to hold big amounts and profit from holding that kind of amount. So now we're going to be diving into trading stocks and trading crypto. We're going to be looking at the two we're going to be looking at trading stocks versus trading crypto. So we're going to teach you how to trade stocks also here on this spot analyst course and how to trade crypto. And we're going to use the following tools. The tools we're going to be using, we have our CoinGecko, our DEX screener, and our centralized exchange, which is our Binance. We also have decentralized exchange like our Jupiter exchange. We have Uniswap. We're going to dive all that in trading on decentralized exchanges. And we also have staking and yield finance. How can you holds cryptocurrencies and how can your currencies actually fetch you passive income without you trading or doing anything just by having the proper knowledge of staking and yield finance. So for our stocks, we're going to be using Bamboo and CoinMarketCap. Yeah, you're seeing Xness here and you're wondering whether Xness, like I said previously, isn't a a forex broker. Yes, it's a forex broker, but forex brokers, the adoption of crypto is not just it's not just countries alone or individuals. Forex brokers are also adopting trading of cryptocurrency. So their on their platforms, you can actually still trade cryptocurrencies. So now this mentorship program is going to last for 2 months, 1 month learning and 1 month mentorship. And the classes hold Saturdays 11 a.m. to 2 p.m. West African time, and on Sundays 3 p.m. to 6 p.m. West African time. So here at Kleiner, we have how we position you for success. Sorry, I'm a bit fast. I'm trying to uh, follow our time. So here at Kleiner, we position you for success. It's a simple formula and very important and easy to follow formula. We have our TS plus TPRM. You're wondering what your TS is. TS is your technical skills, which is your technical analysis, your fundamental analysis, knowing how to analyze the market properly. That's one aspect. You know how to analyze. All right. Now, next, we have your trading psychology, which is your TP, and your risk mastery or your risk management system, which is your RM. So adding your technical skills, which is knowing how to analyze the market with your trading psychology, proper trading psychology and risk management system. Here at Kleiner, we say adding that guarantees you for success. Success with proper technical skills, knowing how to analyze your proper trading psychology by practicing simulations and knowing how this system actually works and developing a proper risk management system, which leads to your risk mastery, guarantees you success in trading digital currencies. So now, our additional services include one-on-one sessions with experts. That's part of our mentorship program, our 1 month mentorship program. You get to pick a time where you have access to an expert in the market and you can discuss with them. We have the live trading analysis. We get to trade, we get to analyze the market together. We have the navigating financial investments. We have various opportunities in digital assets where your money can fetch you more money. And we get to navigate those aspects like your yield, finance, and staking. We get to show you, okay, yeah, this is how you can earn passively if you actually don't want to trade. So now we have the market rundown. We get to do general analysis of, okay, yes, are we in a bullish season or bearish season? And we have the alumni community. We have a group of people, of traders, of learners all together having the same purpose, which is learning how to navigate digital assets and how to trade them. So now our next cohort, we would love you to join our next cohort, which is starting on July 5th, the 5th of July. Yes, 2025, the 5th of July, 2025. We look forward to seeing you there. And what our prize is for you to be part of the first 20 people, you get a 20% discount of 40,000 naira. And we're going to be diving into our site where you can purchase your course. Give me a second. My colleague is also going to share that. Please ensure you fill the attendance to get the recorded session and also go through the chats. If you have any questions, you can drop messages and we will respond to you. So here you can check out our social media, which is Instagram and Facebook. We have chat with Kleinel. By the time you click this, it takes you directly to our WhatsApp where our team is readily available to give you feedback. Then you can access our brochures with this link. Our brochures, you get to see, okay, what the course Forex analyst entails, what it has to offer. You also get to see what the spot analyst course has to offer. So right here, you get to upload your payments after making your purchase from the store. Start making your purchase from the store. So we have various means of payments. Sorry, this is taking time to load. Mm, okay, so while that is taking time to load, when you visit this first uh, for you get the ability to make after making payment, you upload your proof of payment here, and an email will be sent to you with your welcome package and everything, and you'll be added to a community because this upload your receipts here where you upload your receipt. It has a form that we'll use to contact you. So Uh, yeah. So concerning today, thank you everyone for joining us, and we're looking forward to seeing you in our next masterclass. Thank you for your patience and thank you for joining in with us. And once more, I am your host for today. My name is Clinton, and I look forward to seeing you in our next masterclass. Good evening.